welcome to Engineer Investor. Today in our stock view, I'm gonna cover this new India assurance company. So, as the company name suggests, it is an insurance company established by Sir Dorab Tata in 1919. It's a very old company that I have seen in stock market. It is still trading today. Okay, and 1946 to 1980 satellite insurance. Afro-Asian region, not only India, they are into African region also. So they are into industrial insurance, liability insurance, commercial insurance, personal insurance, a lot of insurance. In insurance companies, what is the benefit is like you will get a lot of funds. For example, you have to pay insurance for your car or two-wheeler or whatever it is, your assets. But mostly 80-90% there will be no any accident or something. So the claim is not there. And the payment what you are making in advance. So that's a good reserve for them. So insurance companies will have that positive cash flow. They can constructively use or invest in better products and they get a maximum returns. So this cash flow is always positive in insurance companies. Days high is 170 and low is 168. Just 2 rupees change. Yeah. And 52-week high is 221. 52-week low is 135. All-time high is 382. And the TTM PE is 23.89 where, against sector PE of 41, which is fairly valuated. 23 PE is okay. We can say it's average. And the strengths increasing revenue every quarter for the past 4 quarters. Not much weakness. Opportunities, no opportunity. Threats below 200 days moving average, it is trading. So threats and all that is for trading categories. We are into investors. So we don't have to worry. See, 1919 from 1919 it is 2025, more than 100 years company. We don't have to worry. Just we have to trust on it. And it is a very slow moving. I think next we will see in the yes, as we see here, it was around 320 somewhere in 2024 August and all. And then it has came down. Now it is under consolidation. It is now trading around 168 in that range. So a little bit low also it may go, but uh, we can hope, 1 or 2 quantities, 160 rupees, 200 rupees is not a big deal. We can just buy. So that should not be a big deal. Analyst rating. As we see here, outperform is given 67 percentage, and the price performance, as you see in the past 1 year, it has always given negative interest in the price chart itself. We have seen, and the last 1 week it is 5 percentage up, and 3 years back it was 37 percentage. Whoever invested 37 percentage profit, and as I said, it is 160 rupees, 200 rupees, not a big deal. We can just buy one share and leave it. Technicals. Technicals, as we see here, 168 is a pivot point, 170 to 175 is resistance, and 165 to 160 is the support levels. Days moving average, if you yes, a simple moving average, 20 days 168, and 200 days 178. So that's about it. Public opinion. It is like 100% buy. Very few limited people so only has given opinion, I believe, because it is not a very popular share. It's not a famous share. So it is a slow growth share. That's the thing. Um, Financials. And financials, as we see here, revenue is little bit growing slowly, stagnantly. 2024 it was 43,675, but in 2025 it is 43,541. A little bit reduction, but somewhat okay. And the small range it is going on. That should not be a big. So shareholding pattern, promoter is 85 percentage, and the DI obviously it's like a government backed insurance company. So DII is having almost 11 percentage, and the FII has 1 percentage. Public has 0.39 percentage. It is very like not much traded, not much. interested by the investors, traders, and all. Traders and all, I don't think they will come to the stock at all because it is not so volatile for them to make. Here comparison as we see here, ICICI Lombard, PAB FinTech, Go Digital. These are all some of the peers we can say comparators. But among these, obviously, New India Assurance is the lowest price, and the PE wise also, this is very less. Yeah, in conclusion, stock trading at a fair valuation and competition increased. There are a lot many insurance companies are there. We get calls very often from many branded insurance companies to take insurances. So competition is increased. So the growth is very less. But we can consider for medium term. We can consider and forget it for some time. And when we get a good profit, we can just come out. Very one or two quantities we can buy. So it is also our learning journey. We have to, when we start investing, we learn about the company, we learn about how it is performing. So it's a kind of a learning education curve. So it's better one or two we can buy so that we will be inclined to learn their business and then understand their stock performance, everything and all. That's all. Thank you.